Hi, it's John Kelly. In this module, we are going to discuss review engagements and in particular, some advice from CPA Canada. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, the first piece of advice is to document the understanding of the client. And this is important and relatively easy. You really can't do a good review if you don't have an understanding of the client, and it's not that hard to do. Now, 2444 has a list of required items. It's similar to before. It's a little longer than the list before. And so, for instance, you have to know about the nature of the entity and its operations, for example. And apparently practitioners are missing some of these. They're not documenting their understanding of each of the required items. And as I said, it's really important. The understanding is really important, so document it. And the simple solution to this is there is a list in 2444. And if you incorporate that list into a checklist, you will then be sure you have addressed all of the items in the section. Second thing that is required in the new section, and which apparently practitioners are missing, is we have to identify areas where material misstatement is likely. Now, the first thing we have to note is likely material misstatement is higher and perhaps much higher than moderate risk of material misstatement. Likely is, it's really probable that it's going to happen. And I think most reviews are simple, so often, indeed almost always, there will be no such areas after the bookkeeping's been done. But if there are any, of course you should do something. And that's kind of the same requirement as before, as if we thought something was wrong, we did something about it to correct it. So the simplest way of dealing with this is to document that there are no such areas. That would be the simplest thing, and say, I've understood my client and I've thought about this, and there are no areas where material misstatement is likely. And I think that will be most often the case. And if there is an area where material misstatement is likely, of course you're going to do something about it and document the fact that there is such a likelihood and what you're going to do about it. Similar vein, in paragraph 46, it says that we are to address all material items in the financial statements, including disclosure. And the old standard had a great list of questions for this. There were questions that went through pretty much every single item in the financial statements. And so if we're supposed to do this, we could continue to use that old list and adapt it to satisfy this requirement. Remember, as in an audit, an immaterial item could contain a material error. So cash, which is only $10, which is immaterial, quote unquote, could contain a material error. So my view, rather than going through and deciding items, spending the time to decide items where they were immaterial and couldn't contain a material error, I think it's just best to address every financial statement item. The old list did that. It didn't take that long. So rather than adding an additional step, we just might continue to go through each item in the financial statements. As I said, so scoping out an area rather than looking at everything is probably more work. You have to address all material items, and that would mean that you would have to include documentation of why the immaterial balance could not possibly contain a material error, and that might be a lot of work and a hard explanation. You might just want to look at everything. All we're doing is inquiry and analytical procedures, so it's not like we're getting out of doing a whole bunch of work by doing this, and I think we're probably doing more work than we're avoiding. Now, the other thing, don't forget, there are specific items with specific procedures, related party transactions, first-time review, etc. There are required things you have to do, inquiries and things that you have to do. So make sure you have these in a checklist and make sure you do them if they're relevant. Expectations for analytical procedures. This is like audits. If we're doing an analytical procedure, you have to have an expectation. And I think that's just obvious. If you are just looking at something and going, oh, that looks about right, with no basis for why it looks about right, that's not a very good procedure. Now, you don't have to get very complicated. It could be your expectation is, I compared this year to last year because I expected this year to be similar to last year. And if it's not, we'll document that and investigate, do something. Our analytical procedures could be more complex as needed. Sometimes certain components are very amenable to analytical procedures, receivables often. Others are not. But analytical procedures are really powerful, both in an audit and in a review. And they're a big, big part of what we do in a review. So document what you've done, and a checklist can help you and prompt you to make sure that you've documented your expectation. The other thing they've done is we do analytical procedures and inquiry, and so there's a much longer list of things that we have to document, and we have to document them. The documentation paragraph requires that. The simplest thing to do, I think, is to update the rep letter and be sure that all the required inquiries are documented in the rep letter, and then go over that with management when the letter is obtained to document the inquiries made throughout the review. Now, if you want to, you could document each individual discussion you had with management one by one, and you could do it in a checklist and in the working papers, and then do it again in the rep letter. That impresses me as being inefficient. So there's a much longer rep letter, and make sure you get it. There is a specific list of things we have to ask management about, and we have to document it. So be sure the rep letter includes all of this. And if you want to document it again in the file as a series of inquiries, you can do that. Though your file review process would have to make sure that the inquiries documented in the file and the representations in the rep letter were the same. So again, my view and my preference is do it on only one place. The other thing you have to do, and this is like audits too, and this is annoying, if you have unadjusted differences that are other than trivial, you have to attach a summary of those to the representation letter. Often in a review there is none. I would have sometimes interesting discussions with clients, and they would look at me and, what do you mean you're not going to adjust everything you found? That's why I hired you. I want everything adjusted. That's your job. So if you find something wrong, please fix it. It's certainly another reason to adjust everything rather than saying, oh, these adjustments I have are immaterial, I'm not going to make them. Well, then you have to attach it to the rep letter, and you have to go over it with the client, and they may look at you and wonder why you didn't adjust them. So remember, it's a review, and sometimes people make it sound like we have to do more than we have to do. All that is required is analytical procedures and inquiry. And so we are going to make a judgment as to whether one or the other or both is required, and we have to do enough of one or the other or both. So let's just make sure we do that. And unless material misstatement is likely, we're not going to do anything else. Now, efficient and inefficient. One of the ways of documenting your understanding of the business is you could write a couple of page essay, and that would do it, and that would meet the requirement of the standard. I would argue that's inefficient and difficult to update, and probably won't get updated. So my preference is have a checklist which has reminders of all the required items and a space to note how the client deals with the issue. It's easy to miss the required items if there's no hints. And a review is often simple and there's often little of note. So my preference is to have a checklist and have reminders and then make sure that you do that. And I said this one before, document all management inquiries first in a checklist, second in the working papers, and third in a rep letter. That impresses me as inefficient. The efficient way, do it only once in the rep letter and have some reminders in the checklist perhaps so that maybe you're documenting it twice. The rep letter, I think, is the best documentation. It's signed by management. So even better than having a note in a checklist or a note in a working paper, I talked to Bill about this. You're getting management to sign the rep letter. And I said this before, but scoping out areas that are immaterial, document the work done to do this and the rationale for the conclusion. That impresses me as being a lot of work, and you might be wrong. I would suggest you just look at all financial statement areas regardless of materiality. If an area isn't material, it won't be hard to do analytical procedures or inquiry. And as I said, work done to scope out and look at are kind of the same, so I just don't see the efficiency gain in that. Design individual inquiry and analytical procedures and link to financial statement areas where the area is material and could contain a material misstatement. That's kind of like an audit. Or just examine everything with either inquiry or analytical procedures, and that automatically links to the area. And again, so the time saving of skipping an area is too high a documentation cost. And then I see people doing this or recommending that it be done. Produce extensive documentation for the rationale for why areas might or might not be likely to be misstated, particularly might not be, and that's very difficult to do. My preference is to examine all areas and based on that conclude on areas where material misstatement is likely, and because that's often none, I prefer to do that. So having examined everything, you conclude that there are no areas where material misstatement is likely, and that's common. There are two requirements based on the understanding, identify where material misstatement is likely. That is I prefer to literally follow that requirement of the standard. Develop an understanding, identify where material misstatement is likely, know where, and document that. And 106, not really clear. I think it requires that we document it. So having a spot in your checklist where you say, I've developed an understanding of this client, I have not identified any areas that are material or material misstatement is likely, satisfies that requirement. So always remember, it's not necessary to take the most complicated possible approach. And some well-meaning people seem to like to specify that and develop the most complicated approach possible. My preference is literally follow what the standard says. The standard is pretty simple. And where the standard says you should document something, do so. I think having a checklist that helps you and reminds you and prompts you to document stuff is a good idea. And always remember, we're supposed to be efficient and effective. Two reasons. One is I think we kind of owe it to our clients not to take the longest possible time to do their work. And second, our staff. If we pick an unbelievably inefficient, time-consuming, boring way, they're pretty quickly going to decide that they don't want a career in public accounting and what we're doing is stupid. They may not know why. So being efficient and effective, we're doing our duty to our client and to our staff. So thanks for listening.